It never gets easier by definition, because if you are doing your job right, all you're doing all the time is earning your way into new, really hard problems to solve. If you have some point of view that you're just going to elegantly engineer the solution to one problem so well that it will scale forever and then you will be done, guess what? Like, that's not how it is. The way it actually is you go get product market fit for a use case with a segment. Well, now you got to figure out how to dominate that use case in that segment. Okay, well, now you also got to figure out how to earn your way into the second use case with that segment. Guess what? That's just as hard as it was to do it the first time, except also you're scaling the first use case. So now you have to do two things. You have to do this magic, really hard thing that almost nobody can do in the first place while you're scaling this other thing. And then you have to earn your way into the third use case. And then you have to get into a new segment that you don't even know. At every stage, you earn your way into these new opportunities and problems, and you either succeed or fail at capturing them. And so every 18 months, it's a question as to whether you're going to be one of the companies again. I definitely thought when we really got product market fit on steroids, which took a long time, but when we got it, I had the sort of naive founder perception of like, this is going to be really hard, but we're going to grind our way through this growth period. And then like magical executive will show up and solve all my management problems or whatever. And it turns out to be completely the opposite.
Welcome to The Peel. I'm your host, Turner Novak, founder of Banana Capital. Today's guest is Tommy Nicholas, co-founder and CEO of Alloy, the identity and fraud prevention platform trusted by over 700 financial service companies. Our conversation explores the early days of fintech, when more consumer financial protections actually lead to more fraud, and we get into the weeds of building a technical platform company like Alloy.
Sometimes the secret is like, that actually is how you do it. Actually, you should wire that straight into the DNA of every hire you ever make.
We talk about embracing that the hard parts of company building are actually the best parts, and why you're most likely to give up when things first start getting better.
You're the farthest away in time from when you were hyped up. And if you just look back at the short-term progress curve, it's marginally up. And so you're putting the maximum effort into the most modest gain that you'll ever see. And you're so long in time from when things looked like they were just going to work that you basically get demoralized.
Tommy also gives his anti-PLG thesis, why hands-on sales implementations in the early days gave Alloy product market fit on steroids.
It's a secret to just be like, let's front run some costs and basically make sure the implementation gets wired into the fabric. And then let's figure out what insights we missed that made that so hard to do.
We talk how hiring changes as you scale, getting hundreds of no's over 20 months raising their seed round, and why TAM doesn't matter.
We spent so much time trying to do TAM analysis.
Oh, really? Like for yourselves or for investors?
For investors, what's the TAM? What's the TAM? And then someday we never talked about it again. Like, like 2019 came around, it turns out it doesn't matter. Nobody cares.
A quick thank you to friend and prior guest of the show, Charley Ma, for introducing me and helping brainstorm topics for Tommy. A reminder, I publish new episodes of The Peel every week, exploring the world's greatest startup stories, just like this one. Tune in next week for an episode with the most active angel investor in the world, Ed Lando at Pareto. Now, let's talk to Tommy. Tommy, how's it going? Welcome to the show.
Hey, thanks for having me.
Yeah, thanks for coming on. Really quick for people who are not familiar, can you just tell us what Alloy is?
Yeah, well, because we're on Zoom, I can't answer your question directly. I have to say the following sentence. Let me take a step back before I answer that question. It's a classic Zoom phrase. So the one thing to know about Alloy is that we solve this problem. In financial services, the thing that's different about financial services products and other products that offer digital stuff to consumers and businesses is everything that the users do in financial services is risky. If you open an account or send a payment, you might be committing fraud, you might be committing money laundering, or you might be taking on a debt obligation you can't pay back. And every single action, like literally logging in, opening an account, touching your app, has risks that touch one of those three things. And Alloy is a foundational platform to manage fraud, AML, and credit risk, specifically as it relates to the actions users take in financial services. We only focus on banks, fintechs, credit unions, and other regulated financial services providers in the US, and then our office out of the UK and Europe. And so what we do is we go really, really deep on the integrations, tech, partnerships, features, analytics, et cetera, that make fraud prevention, AML detection, and credit decisioning work, specifically as it relates to users of financial products. And that's Alloy. We are best known for doing everything I just described in the identity verification world. Your first time you're coming to a bank to sign up for an account, they have to verify your identity, check if you're a known money launderer, check if you're a known kind of credit, somebody who's known to default on credit obligations. That's like what we're best known for. But we've extended the platform to a bunch of other kind of areas like authentication, ongoing risk rating, other things we can talk about. But that's really the foundation of what we are and the platform we built.
From there, sounds pretty like a pretty big problem. Sounds pretty complicated. How did you initially come up with the idea?
Yeah, it is a big space, and like we'll probably touch on like the different aspects of it that we work on. But we actually came to the problem as builders, and that is actually our whole DNA. Like the people who started Alloy, we say there's three founders of Alloy. That's like if you look on the internet and you like who are the founders of Alloy, it'll say Charles Hearn was a CTO, Laura Speakerman was the kind of president and co-founder doing all the business stuff, and then Tommy Nicholas was the CEO, with some unknown job for most of that time, but still doing the CEO gig to this day somehow. Okay. It's not the business stuff, and it's not building the product. Like, what is it? But there was actually a bunch of other folks, a guy named Peter Hanneman, a guy named Chris Mallow, Scott Clark, who's still with us at the company, who were part of the founding team. And almost all of us are builders, engineers. I was the worst of the engineers, which is why I'm the CEO. That's like how
like, don't touch the code.
Exactly. They were like, you go be the CEO so that you won't take down production. And that was the bargain that we made. And so we all approached this problem from a builder's perspective, specifically because we were all working together at a company that maybe we'll talk more about later that was doing ACH processing, which is like when you need to deposit money into your bank and you need to take it directly from another bank, that's ACH. It's like digital checks is kind of the easiest way to think about it.
Which is kind of commonplace now, right? Like
super commonplace now, but it was really, really hard 10, 12 years ago. This was 12 years ago. It was really, really hard to do ACH on the internet. And there's only really two reasons why that was difficult and still remains somewhat difficult, but it was really difficult at the time, is unlike card payments, there was no notion of like tying a credential or some authenticated method to the payment. Like you literally would give people your account and routing number and they could pull all the money out of your bank account if they were a regulated financial institution. Like you would tell, Acorns at the time, here's my account and routing number. And they would have no way to even figure out if that belonged to you. And then they could just go take all your money and put it in Acorns. Now, as a user of financial products, that's great when it works, which is you just say, take money from my Bank of America bank account and put it in Acorns or whatever. I put it in this investing account and use it. And that's great. Except what if that isn't your bank account? Or what if you didn't tell them to pull that payment? And so ACH is like a weird, scary payment method because of that. And because there's no way to figure out, or there was, and there's still, but there was at the time, no way to figure out if you even had that money in the first place. So you said, deposit money into investment account and then buy Tesla stock. Well, they go and execute that transaction. Tesla stock goes down. Then find out 3 days later, literally 3 days later, that you didn't even have that money in the first place. Well, somebody's got a deal. So maybe it's not even your bank account in the first place and there's no money in there. That was like kind of
the holy grail of the worst.
Yeah. Exactly. And so what we were working on at the time, this is not Alloy, just to be super clear, but what we were working on at the time and the company we were working for was doing guarantee of all of those problems I just described to you. Like if you used the tech, they would indemnify the fintech company that needed to link ACH accounts or whoever was using it, the Bitcoin wallet that needed to deposit funds to buy Bitcoin. We would indemnify them of all of that risk that there was no money in the end account or that the account didn't belong to the person. Or the third thing, which was that maybe they were actually all of it belonged to them and all that, but they would go and lie and say, oh, I didn't make that transaction. That wasn't me. And use consumer protection laws to kind of do first party or sort of other types of fraud. And as a builder, like we were all engineers and product people. I was the worst, as we've mentioned, of those. But we were all struck by how much of the process of verifying customers, figuring out what their intent was, figuring out what their obligations were. Like we thought we were building something that ended up looking like what Plaid ended up looking like, and a payment processor kind of all in one. Like that's what we thought we were building, but all we ever spent our time on was risk management, fraud prevention, identity verification, money laundering detection for our sponsor banks, and credit obligation kind of assessment specific to this one area that we were dealing with, but it was sort of broadly similar to a lot of other things. And it wasn't that there weren't products that existed that could help the credit bureaus know things about people's credit history. And there were emerging products around identity verification or fraud prevention or first party fraud and third party fraud and synthetic fraud. Like there were products coming out. But as a builder, the experience you actually had was like you had to build a system from scratch to manage how you made different decisions. You had to integrate with all those products. You had to figure out one product didn't work, and then you integrated a different product, and then you had to build analytics, and like you had to build workforce stuff for people to say, oh, we have to pause this and let somebody look at it and click a button. Like it was surprising. We just everything else we did, there were core systems that just were supposed to work or be the fabric upon which you built these whatever, whether it was CRM or AWS for compute infrastructure. But when it came to make decisions about fraud, AML, and credit risk in real time that touch users and touch regulators and touch your sponsor bank and you were just supposed to figure that out, man. And that just seemed insane to us. And it turns out that it was not insane, because actually there was not a monstrous need at that time for that in the market, because digital financial services was small. But we all felt like it was a monstrous need because we were trying to do one of these bleeding edge fintech things, of which it felt like there were lots to us, but there actually weren't. And we also thought that even to the extent where I do think we had some insight was to the extent that there wasn't a ton of digital financial services at the time, it was obvious there were going to be. And so we all decided to start a company together to basically go tackle that problem head on, instead of as part of a larger set of things. Just say, just this one area feels like it's the future to us. Let's go build a foundational system, not a solution to any given problem, but more of like an operating system, a platform for fraud, AML, and credit risk decision making, particularly in real time financial services. And that's what we set out to do, and turned out to be really hard. But 10 years later, here we are.
Yeah, it sounds. I've heard that you're doing pretty good. Is there like just a headline number that with like certain amount of revenue, certain valuation, employees? Like I don't know what's the best metric of success, or like what's public that you've shared.
I was warned before this not to say a couple of things, so I'll say some other things. I was given a stern talking to. But no, we did. So a couple of things that are publicly available. We have over 700 customers in banking and fintech. Over half of those are regulated banks or credit unions. So when we say 700 customers, we're not talking about a PLG motion where 700 people signed up. Like we have 700 very serious people, very serious companies doing very serious things with us, and we're really proud of that. We have I think at last count 258 employees, and boy, are we trying to get that number up as fast as we can. We have as many roles open as Greenhouse or whatever we use can. Like we're gonna break their open roles platform. Probably not, but like that's what it feels
You're gonna have
like.
to upgrade to their enterprise tier
We
to add
definitely
more.
we got to pay somebody more money, but we are hiring very, very aggressively, and we've raised $210 million most recently from Lightspeed and a bunch of other folks. Bessemer Venture Partners led our Series A, Canopy led our Series B, and Lightspeed led our Series C. And we are approaching a very significant revenue milestone that I'm sure we'll talk about at some point. But we're doing quite well, growing like around 40% year over year. So feeling really good.
Nice, that's awesome. Well, congrats. I don't know if I ever said that, but I mean, I know you've been on a journey that we're gonna get on. So it's cool that you know, I don't think you ever like make it out. Like there's always like shit going on, but like it always feels like there's more to do. But as long as you guys have accomplished a lot, so
There is literally always shit going on. And I think it would actually be bad if there weren't. It would be not as fulfilling of an experience. But there is, I mean, it definitely never gets easier. And I think that's that's actually because of a very fundamental thing, which is like, if you're thinking about being a founder, this is the number one thing you need to know is it never gets easier by definition, because if you are doing your job right, all you're doing all the time is earning your way into new, really hard problems to solve. If you have some point of view that you're just going to elegantly engineer the solution to one problem so well that it will scale forever and then you will be done, guess what? Like, that's not how it is. The way it actually is you go get product market fit for a use case with a segment. Well, now you got to figure out how to dominate that use case in that segment. Okay, well, now you also got to figure out how to earn your way into the second use case with that segment. Guess what? That's just as hard as it was to do it the first time, except also you're scaling the first use case. So now you have to do two things. You have to do this magic, really hard thing that almost nobody can do in the first place, while you're scaling this other thing that is a known hard problem, which is dealing with a scaling company. And then you have to earn your way into the third use case. And then you have to get into a new segment that you don't even know. And like, that is the foundation of what makes it so true that at every stage of growth, a huge number of the players you thought were going to work out don't work out, and they have to sell, or they have to just change their view and become profitable. Nothing wrong with that, but like, kind of become a cash flow generating business that's never going to generate the returns on the equity that they thought. Fine outcome, but or has to go start acquiring companies to look like they're growing. Like, at every stage, you earn your way into these new opportunities and problems, and you either succeed or fail at capturing them. And so every 18 months, it's a question as to whether you're going to be one of the companies again. And I definitely thought, and we can talk more about it, but I definitely thought when we really got product market fit on steroids, which took a long time, but when we got it, I was like, I had the sort of naive founder perception of like, this is going to be really hard, but we're going to grind our way through this growth period. And then like, magical executive will show up and solve all my management problems or whatever. And it turns out to be completely the opposite, which is you immediately earn your way into you either unlock being, and like now you either unlock becoming a company that grows in the 40s, 50s, or 60s, or you unlock being a company that grows in the 10s or 20s. And those don't look that different for the first 6 months of it, but like over 6 years, that's everything. So I think founders, I say all the time, should think more about what if it works, not like how great will it be when it works, like actually, or maybe you shouldn't think about that because then you wouldn't do it. But that is the real question. Is like,
Only think about the upside. Do not even visualize the downside.
Maybe actually, you know what? We need more innovation in this country. I take it back. It's actually great when it works. Don't worry about it. Just get started. It's super fun.
Speaking of being super fun, regular listeners might have realized already, but I recently started producing the show by myself. And it's hard. It takes a lot more time and money than you would think. But I just signed the first sponsorship deal that I'm excited to both talk about and also ask everyone to help with. This episode is brought to you by Numeral. Numeral is the end-to-end platform for sales tax and compliance. They handle registrations, ongoing filings, and their API provides sales tax rates wherever you need them with all the integrations you need. Numeral supports over 1,000 customers in both the US and globally, and they pride themselves on white glove, high touch customer service. Plus, they guarantee their work and they'll cover the difference if they mess anything up. They're fresh off a fundraise, raising an $18 million Series A from my friend Chetan Pudagunta at Benchmark, and my friend Nate just joined as the head of growth. Similar to many guests of The Peel, this is the first podcast ad they have ever done. If you want to both support the show and help Nate figure out a podcast or a good channel for Numeral, check them out at numeralhq.com. That's NUMERALHQ.com for the end-to-end platform for sales tax and compliance. Now, back to Tommy. Yeah, because I was going to say, based on you describing through all that, it sounds like you're in the midst of it, or you got through it, or you've learned to like embrace it. Where are you in the journey? And maybe you just said at the very end there, but like, how do you recommend getting through it?
So, you know what made me a happier person? And like, I am just generally a happy person. I don't mean like I had, big bouts of not being able to make it, but like what really made me a happier person as a founder was realizing that earning the right to do the hard stuff is the good stuff. That like, there's not some magic other side that like, that is actually the good stuff. And actually, so let me tell you what the bad stuff is. So when we started the company, we were coming out of a period of a lot of stress. We were working at that previous company, really cool, doing interesting work, but it was a very stressful situation for a whole bunch of reasons maybe we'll get into later. And, so coming out of a stressful situation, but we all loved working together. So we decided to start a company. We get into Techstars, we raise a little bit of money, and we're feeling good about that. Like, hey, we got through that. We raised some money. We got some early reference design customers. Like, this is great. Like, we're going to make it. So that was a good period. We, from that point through maybe almost early 2018, sometime in the middle of 2017, but really the early 2018, basically nothing super stressful happened because nothing happened at all. Basically, we could not get like our early design customers that signed with us, like the products that they had signed with us to build, they didn't end up building. So now that's super horrible, but it's also low stress. It's like, well, we're not building for those customers. And I had a lot, there were actually points in that where we were grinding and working 80, 90 hours a week trying to fix it. But by the time we were in the beginning of 2017, there was kind of nothing to do some days. And like, I'm not saying that I actually like went to the coffee shop and just sat there drinking. Like, yeah, no, because we're always trying to figure something out. But there was like, we call it the doldrums when we refer back to it around here, because they're just like, it felt like we had tried everything. And, like we had a million balls in the air of customers we thought might sign or go live or different things, but like none of them were landing. And then all that work that we did over that intervening 2.5 years, whatever you want to call it, all started to pay off in a way that felt slow at first, but then it got really, really fast. And it was like, okay, the small bank in Boston that we've been trying to land for 18 months is like ready to go live. And we thought it just we'd given up on that. Like, we were just like, that's never going to happen. Or, oh, this other deal that we implemented 9 months ago, but never went live, and we just gave up on, like, they just went live. And like, now we have 2 customers. And now we have and then it felt like extraordinarily stressful going through the next like 2.5, 3, 4 years, because it's just this compounding, like, now you're just scaling, hiring, can't hire fast enough. Oh, I'm doing everything. This is a well-documented part of the founder journey. I'm not breaking any ground here. And so then you start to convince yourself, like, okay, this is the bad stuff because this is so much is going on. But the reality is the bad stuff was that period before that, when nothing was happening. That is the bad stuff. Like, that is when you feel really unfulfilled, unsuccessful, like bored, boring. And there's been other periods where I felt like there's been a peace, and every single time there's been a peace, I'm like, try to enjoy it and try to like know that it's going to end. But I really feel like I no longer say, I hope this is just how it is, because I kind of know that if that's how it is for long enough and there's too much peace, it only means one of two things. Like, either we've run out of hard problems to solve, and that's not going to be really interesting, or more likely that we're not earning our way into like the next set of hard problems. Because, by the way, the market is too competitive. Like, American technology companies are too competitive. There's no way you just sitting around and sitting on your laurels and not trying to accelerate something or whatever is working and winning. There's just like, I assign a 0% probability to that being true at really any given time. And so, ultimately what you are hoping for is the right type of chaos. Like, that's really the good stuff. And unnatural peace can kind of be a sign of the bad stuff, even if maybe you play a few extra rounds of golf during that time, which I try to do when I earn the right to.
So I feel like you've mentioned this before, that there's this point where you feel like you're the most likely to give up is actually the worst time to give up. I don't know if I said that right. Maybe you kind of know what I'm describing. It sounds like maybe you went through that. Can you just kind of describe that moment?
Yeah, this is something that I notice a lot, not just in founders, but in actual like projects in company building. And I'll use the company building example I was just talking about to illustrate it, which is the point at which things are getting better and that you're out of the hard build is the point that people are most likely to give up.
And how does that usually play out?
Yeah, so this is what it is. So let's use the example I just gave, which is we start the company, right? We're going up. We raise some money. Everyone tells us we're great. We sign like a design customer.
Yeah, you got like a
And then
TechCrunch article and
the TechCrunch article, and then the design customers' timelines are delayed. Oh wait, they're going to kill the project. Oh, the other design customer we had is pushing the project out 2 years. Okay, now we're down here at the bottom. We're like way below where we started. It's like worse. And then we have to go fix all that, get the next customers. It's still kind of getting worse. Okay, now a customer starts to go live, like we're trending up. Another customer starts to go live, we're trending up. Okay, so right at that point, we got the two customers. We had the customers, we lost the customers, we had to go get the other customers. We got one live, we got the second one signed. Why is that the point in a project where people are most likely to give up? It was definitely true for me that at that exact point I just described, I went to my co-founder, Laura, and I was like, this is never how is this ever going to happen? Like, we're trying to sell to banks on these infinite sales cycles, and we need banks, or the banks won't work with us. How are we going to, this is a chicken and an egg problem. How are we going to get over it? I used to think we would get over it, but now I can't see the finish line. And Laura is much smarter than me and said, like, no, I see this. I can feel how much people want the product we're building. And I just know that we are clever enough to figure out how to give it to them, because how can it be that we're building something that people want so badly and we won't figure out how to give it to them? And I was like, I know, but 2.5 years of evidence suggests,
Yeah. And you probably had like a couple customers and you're like, it's still not really working.
That's what it is. Well, it's because you have a couple customers that it makes it so hard to imagine, because you're the farthest away in time from when you were hyped up, right? You've been going through this bottoming out for a long time. And if you just look back at the short-term progress curve, it's marginally up because you're turning it up. Like, you know what I mean? It doesn't just jaggedly start going like this, like you're turning it. And so you're putting the maximum effort into the most modest gain that you'll ever see. Like, you're putting all of this effort, and you're so long in time from when things looked like they were just going to work that you basically get demoralized, and you say, it's going to be this much work just to turn this little bit. And it's been so long since I thought this was going to be easy. And that's when people give up. So when you have that's founders have that experience, but also when you're building, I've experienced that here when we were building and launching new products, where it's going to work. Oh, it's going to kind of be hard. Oh, it's kind of starting to work. And then everyone starts to go, this is never going to work. And I now know how to see it. And I can see like, oh, that person's in the giving up because it's working mode. You think this is now the progress line. It was going to be like this. Now it was like this. And people are really willing to sign up for the turnaround. Nobody wants to give up before they've seen the thing turn around. But once it starts turning around, I did it, everyone does it. You start to extrapolate forward. This growth rate sucks, but it's because you're still turning it up. Like you're turning it like this. And I just see it all the time. And I think it's like a very common phenomenon that once you see it everywhere. And then you can learn to notice it, point it out to other people, help people through it, because it's so important to keep turning that upwards.
Yeah. Do you have a way to maybe dissect a way to figure out if it's worth continuing the turn, or figuring out like this is not a real turn and we actually probably should get up? I don't know if you have any experiences.
I used to think I was smarter than I am in a lot of different ways. And I've spent my entire adulthood being humbled. And one of the things I used to think I knew was the difference between something that was worth doing and something that wasn't worth, like a slog that was worth slogging and a slog that wasn't worth slogging. I have a horrendous track record on that. I have my friends who have slogged through slogs, and the ones that have turned out to be a slog worth slogging, and the ones that haven't, I couldn't have predicted. I'm never able to predict it. So I've now got a new lease on that, right? Which is basically, it is actually where I started when I was younger, even younger, how I used to think. I'm like back to like my 15-year-old point of view, which is basically like never give up, because it's two things. One is you got to have some point of view on like, is the work the kind of work that you could enjoy? Like if it weren't this way where you're in this do you like the work? Do you like the mission? I know that that's become a little bit so overused it's unmeaningful, but like, do you still wish? And this is how Laura, my co-founder, snapped me out of this. Is she was like, do just skip one step and just say, let's skip the one step where we're in the slog. Do you still really believe that there will be a foundational system for fraud? And fraud and AML is mostly what we're focused on at the time, fraud and AML, and then potentially credit, that will be adopted by financial services companies? Yes. Do you like working on that problem when it is something other than a rewardless slog? Yes. Okay, then it's just never give up. Like they're going to have to drag our bodies, you know, like to the graveyard before we give up is like the only real way to kind of make the decision. Because if you make the decision any other way, I think it's too difficult to like, I think all the magic things that come from just being hard committed, all in, kind of go away when you start rethinking it. And I think you kind of rethink it when you're presented only with an opportunity to really radically rethink it for some reason, which might be big life change, could be like, you know, there's a bunch of them that kind of come up, and maybe you take some of those opportunities as they present themselves to like make another 3-year commitment or a 6-year commitment. But I kind of think the best answer is like, there's no turning back like mentality, because you unlock a lot of magical things with with a no turning back mentality, longer term thinking. You get to, other people start to believe that you're undefeatable. Like you can engender that feeling in others that's hard to engender in yourself. So if you can engender it in others, and it's hard to engender, it's like hard to manifest that feeling for yourself. So if you can help other people feel like they can draft on that feeling, like that's such a powerful thing, because they, now we are in partnership, kind of unbeatable, and you know, never going to quit.
Yeah, like if you're unbeatable, then I'm probably unbeatable too because I'm on your team.
Exact, or if I don't feel like I'm unbeatable, but I feel like I'm unbeatable with you, as with us as partners, and maybe neither of us actually feel that way like deep in our bones, but like the way we can kind of create that as a group, you get a lot of those things that start to go, and then you start to believe it yourself, and then you can compound those things. So I don't really know, but I think my mentality now is more trying to reevaluate more the basics of like, do you still think the thesis is true? Because I do know people who I'm like, you need to stop working on this problem because you don't even believe the hypothesis anymore. Like, you're the people who keep trying to pivot to different businesses because the hypothesis is I would like to start a business. I think that's perfectly worth giving up on, maybe before you even start, if I'm honest. But if you're on an idea that like kind of eats at you, and it's going to eat at you no matter what, um, I think you kind of want the world to take it away from you before you give up on it. Meaning you ran out of money, and then you ran out of money personally, and then, or like whatever, like whatever the reasonable ends of that are. Maybe you shouldn't run out of money personally, but I just mean whatever the reasonable ends of that are, make the world take it away from you, or realize you weren't that passionate about it and you were just trying to start that. Like if you really do realize, as I did with one of the things that I was doing earlier, that like, I'm just doing this because I think starting a business would be a cool thing to be. Um, I wasn't even trying to start a business in that one. I was trying to start like, like a website. Then maybe you can give up on it. But I think like you want that to be the reason, like we're out of options. We literally have to walk away from this. Or if we're honest, we didn't really care about this. We don't really think this is a good idea anyway. And I was just trying to, I just didn't like my job and wanted to do something else. Okay, well then you can give up. But that's the only reason.
Yeah. Okay. Well, so speaking of not giving up, you decided you're going to stick with this. I know one thing you did is you have this philosophy around sales engineers, and I know that's kind of sort of how you think about getting your next, I don't know, customers 5 through 10. So we'll say Alloy, you have a couple of customers, you decide I'm not going to give up. We're still going. How did sales engineers kind of play into that process?
Yeah, and we used to call the process that I'm talking about like solutions architecting, and it incorporated pre-sales engineering, post-sales engineering, product management, like a lot of different things. And all those jobs are different jobs at Alloy. Now we have sales engineers, we have post-sales engineers, which are like solutions architects, we have product managers, product designers. But when we were really, really early, and like, so the specific thing I think you're talking about, and like, what was it that got Alloy to become like a product market fit on steroids, really differentiated, nobody else thought they could do this kind of platform? It was this magic moment between getting your first couple of customers and a product that you and your CTO and like the early engineers like thought would form the basis of something, and then striking the kind of literal constant deep like mind meld with the customer to deliver on their timelines that don't keep them like delayed while still building towards the platform that's going to be the platform for everybody while still selling, like all at the same time. Like we're selling, we're like delivering, and we're iterating, but in a way that it's going to turn into the platform, not a Frankenstein. I think that skill set just turned out to be like when you talk about like founder product fit or founder market fit, like me, Charles, Laura, and Scott, and the early folks, like that is the thing that we have founder market fit for, of just keeping that an hourly, daily practice that turns out to be productive and building a lot of things in the process that turned out to scale for years. Even though they felt bespoke for the customer, they turned out to be like rigorously built constructs that stood the test of time. And sometimes they don't, and sometimes they do. But that was kind of like, and I don't really, what I think is interesting is I think a lot of the best technical platform companies that we think about I just can't imagine that Databricks didn't do that very well. How else, they didn't just sit in a lab and build, you know, Databricks and then be like, here's some Databricks, hope it works. There's no way that's how they did that. Or, like any of those highly technical platform companies that are integrated deep into the stack of the company. And we work with one of the big cloud companies, and the way they interact with us, like I can tell they're trying to really create that loop. But I don't hear the venture community talk about that as like this founder, as this like thing that, like, I don't hear about it as a concept. And you can call it sales engineering or solutions architecting or technical product management or whatever. But that thing is what I feel like has enabled us to take bold bet after bold bet and get very close to our customers without building the wrong things. And sometimes we do build the wrong things, but like more often than not, we get it right. And I just find it interesting. I'm actually curious your take on this. Like, I find it to be, I was talking to, the reason I'm on this podcast is because Charley Ma was on this podcast and he and I are close. And he told me, to watch his podcast and see what I thought. And maybe we could have a conversation, but I talked to him about this a lot. And I'm like, is this a secret? And I wonder if it is a secret. And actually one of his portfolio companies is in our office right now, helping us install on site, like working with our engineers to install something that they built, something that they sell, but they wanted to make sure the installation goes right for us. And I told him, I was like, I bet you know that I am so bullish on that company now because they're doing that. Like, I don't need to know anything else other than our CTO selected them, and they flew across the country and came in the building to make sure they got all the details right. Like ultra bull, like put me down,
Okay,
And
is this Artie by chance? Jacqueline and Robin?
that might be the case.
I might have to bleep. I might have to actually bleep the names though, but I know they're in New York.
Can neither confirm nor deny. I definitely can confirm. And I just was like, that's the kind of shit I love. And I think that I'm curious your take. Like, I don't hear people talk about that.
I think what's this concept with Palantir? It's the forward deployed engineer.
Exactly.
I feel like it's sort of starting to become more of a like a meme or just like a thing. And honestly, it's probably because Palantir's stock price is up 10x or 100x in the past whatever year. I feel like that's the thing that drives the narrative. It's like when you see a chart that goes like this, and everyone's like, "What can we learn from that?" And let's all copy it, which can be a good and bad thing. I feel like.
Credit to my chief of staff, Eli, who's Eli Coven, who's now off building sales and operations at a company here in New York. But he always used to talk about how he would read about the forward deployed engineers. And he was like, that looks a lot like what we do. But see, when people thought about the forward deployed engineers at Palantir, I do not want to comment on Palantir as like a company. I just talk about this thing. Like, when people used to talk about that, they talked about it with like, that's why that's a bullshit company.
Yeah, I remember. So there'd be, it'd be like 2018 and people would be giving presentations like this company is, the next zero in Silicon Valley.
Fake company.
Yeah, it came up a lot, and I like not as somebody who didn't know it. I'm like, oh yeah, it must be a shitty company. But, like, it's just my not being super close to it.
And I always remember thinking, well, either that does mean it's a fake company that's basically taking like cloud infrastructure and building bespoke things for like a non-discerning buyer, which is what everybody thought they were doing. Or if they got it right, they're basically just front running all of the implementation risk that could exist from a highly configurable technical platform and then driving insights back to the business. Because look, if you're putting forward deployed engineers, like you're not going to be able to charge for those forever. Like you're going to have to productize stuff at some point. Again, the world is too competitive for somebody not to figure out how to productize what anybody's doing with people. So, but if the feedback loops exist, like it's a secret to just be like, okay, like let's front run some costs and basically make sure the implementation gets wired into the fabric. And then let's figure out what insights we missed that made that so hard to do. And then let's create a feedback loop where we can just turn that around and turn that around and turn that around. Like I think of that moment when you're building a technical platform early on as something where people go, okay, go on site and install data infrastructure, like, but that's not how you do it in the future, right? That's how you get product market fit. I think with these technical companies, sometimes the secret is like that actually is how you do it. Actually, you should wire that straight into the DNA of every hire you ever make. Of like what my co-founder Laura says a lot is like get on it.
Get on the plane.
There's like another word, but like get on a plane,
Does it
right?
start with the letter F that's in
Yes,
between
it
there?
does. It
Yeah.
does.
Okay. There we
Right.
go.
She'd probably never, she would kill me. She probably never said that word in that sequence. I would say it that way, but get on a plane, right? And I think it's so true. And, I'm a tall guy. I don't like being on planes, but every single time I've gotten on one, it's, paid off in spades. And so when I look at startups, I actually really look for, I love it when I'm like getting a drink with a founder and they're like, God, I feel like I'm just doing all this stuff that can't possibly work in the future. I'm like, good, like this is amazing. Like, actually, you should do this forever. Like, make like don't ever stop. Don't you got to make it easier. You got to automate it. You got to like, but like be with them. Be close to your customer. Like, don't be scared of creating like proximity between the technical people at your buyers. And so anyway, I think that's kind of a secret that is getting out, but I think it's an important one.
So to probably kind of summarize, it's you do the implementations yourself and you figure out the things that just could go wrong, are going on wrong, aren't quite there yet, and it just helps you just build a better product that just helps them adopt more efficiently.
Yeah, you're helping them, like putting people in front of the customer more consistently who are technical people helps you figure out they might all say, like your customer might say, I can do all this myself. And you want that to be possible. But then the reality is you would be like looking back 30 days after they've started and be like, how you doing? And they'd be like, pretty good, And then it's all of a sudden 200 days later and they're like not renewing because there was some little thing that they just didn't think about and whatever. If instead you put like technical people close to the customer, two things happen. One is they just push them through that, like whatever it takes. Oh, turns out we didn't have an internal CRM. Well, here's how you work your way around that. Like I'll actually kind of help you even configure something you didn't know could happen in the platform to do that. And B, they phone home and they go, hey, there's this thing happening, right? With like two of the customers I'm working with that like we assumed we didn't need to kind of solve for in the product because the customer would solve for, but boy, it doesn't seem like it doesn't seem like they've solved for that. And you can kind of create this flywheel of actually getting the stuff implemented. Like Jason Lemkin says this on about SaaS, which I don't think this is what I'm talking about, but just to give you an analog, because I'm not really talking about SaaS, I'm talking about technical platforms. But he always says like, I had another SaaS vendor who said they could switch me from this to that, and I said, well, will you do it all for me? And they were like, no, you have to do it. And so we didn't do it. With technical platforms, that's death, man. Like we got to be, we got the details matter so intimately. And I think there's a bunch of founder profiles that like people should be looking for, which are like, who are those people I love to like that are going to get on the plane, but also that know how to build that, like, I'm highly technical, but the customer is going to want to be around me. Like I don't need to create separation between me and them. Like I can understand the thing 360. And then I think like a skill set I would want to see in company scalers is, can you work with those kinds of people? Can you build more of them? Can we not be so afraid of having them in our company because we think everything needs to be PLG? I'm kind of like giving you the anti-PLG thesis here. Basically, that's like what I'm really doing. Is this is my okay, you can be PLG or you can be this. I think like those are the two ways you win. PLG means all the things that everyone knows about PLG, but there's some like technical people wired into the fabric that's actually a little bit like even more interesting, scalable. And it doesn't have to create like costs that are untenable for either side. It can just be part of making it all work. And that's like part of my startup thesis right now, if I have.
Yeah, that makes sense. So for people who don't know, PLG is product led growth. The way I've heard people describe PLG that I actually like, and I'm like, oh yeah, that was actually pretty smart. Like I'm gonna steal this and use it in the future. Is it's more of a pipeline strategy. Like it's not a sales strategy. Like people just don't, discover your product, put in their credit card, and spend $1 million on it like the next day or whatever. Like you need to, like it's a way to fill up your pipeline, and then you all the things that you'll do to sell someone something you do, but the leads just magically show up in your pipeline because your product is so good and people are signing up. But so you can maybe like jumpstart some of it, but you still need to do the forward deployed, the sales engineer, do the implementations yourself.
Here's the test I would give for, I think it's hard to do PLG and what I'm describing all at the same time. I think you can try to do parts of it, but like here's the test I would give to founders to think about. Should I invest more in PLG or should I invest more in a like forward deployed engineers is like the extreme version of that. We don't do that here. We go give the technical resource that we think makes the project successful based on what the project is to the customer. That's more how we think about it. So we have very technical people in the sales process being very hands-on, making sure everything is just so. But then we figure out who's needed to go kind of, do they need somebody who's more going to do like ETL for them because they just don't have that, and we need to do some ETL processes to make the fraud prevention work, or do we need somebody who can go be pretty hands-on with their engineers to get like the little nitty-gritty, like, so that's kind of how we think about it. Would it matter for the long-term health of your customer if they got some number of set of things and how they wired you into their product wrong? Is there a 10x swing in some little detail of what they decide to use you for or not? That could be a 10x swing in the long-term value that you can create and therefore like reap from the customer if they got one thing wrong. And the more times the answer to that is yes, the more you need to go and never have an interaction with the customer that doesn't include somebody who's helping them. And for the super technical platforms, I think the answer becomes yes, like a trillion times. So, for example, at Alloy, if you're integrated, imagine you're integrated. We have one of the things that we do is you can integrate with an API and a set of SDKs where you're saying, here's a customer, go do a bunch of things that'll instruct you in your product, like in a point and click way to do, and then come back to me and tell me if the answer is yes, not fraud, or no, I guess yes, fraud, or no, all good, or there's some sort of next step that needs to happen. And it's a true statement that if the customer doesn't understand that the way they're going to get value from the technical people at the customer doesn't understand that the way they need to integrate that whole suite is to let the suite orchestrate all those processes and not have there be some second layer behind us that goes and says, well, because these different data points came back, do this other thing. Like if they don't understand that, they miss that, and they're kind of creating a second layer of orchestration on top of our layer of orchestration, then now all the people who bought the product, like the fraud people who want to go click buttons in Alloy and say, like, this is when we send people to step up and this is when we don't, can't, they actually don't know if that will do that or not.
Because they built like a Google Sheet or like
Yeah.
something else on top of Alloy.
Right. So they go click a button and run a test in Alloy that says, tell me if this would be effective change to my strategy. And it says yes. And they hit go, and then nothing changes because there was some other thing, whether it's like a manual sheet or like some second layer of code that they weren't familiar with, that's overriding what we're saying to do. Well, that's one of 100 different things that could be like that. And so we want people to be partnering with them, even if it says it really explicitly in the docs, right? Like, like people they're like, well, you don't understand this about our business, or you don't understand that about our business. Like we do actually, like we actually do. And if we were having a conversation, you could understand the consequences of that. And I just think there's a lot of companies that are like that. And the ones that kind of embrace that component of who they are and just decide to be really, really good partners, it's not about making the products any easier or harder to use. They should be it actually makes it more imperative that you make your products easy to use. But it's about creating a relationship where you're like guiding to this like great outcome and then figuring out what you need to do differently. And I think companies that do that really well are like 100x better set up than companies who abdicate that responsibility. And again, the test is, does it matter? And if it doesn't matter, well, then don't do it. But if it does matter, don't run away and just think, oh, it was too hard. I see a lot of startups that I feel like died, and I can see it. I'm like, I see that they died, and I go, I bet they wouldn't. I bet they thought it was like, I bet they thought this was gauche.
And they could just be hands off with it when they really should have like leaned in further.
They probably tell their investors, oh, it was too hard of a problem.
That's a pretty good excuse. I mean, that excuse makes sense. Like it's a generic excuse, but like too hard, too difficult. We couldn't build it. Like what? Like yeah, that's a perfectly like down the fairway standard reason.
Right down the fairway. I actually get really scared of when I get scared of even a sort of peripheral competitor. It's when I feel like they're doing this. Like that's when I'm like, okay. Like when somebody comes out and tries to say they have a product, maybe that has some feature that we don't have or whatever, like 9 times out of 10, we have the feature and we're actually the best in the world at that. Cause like we are just a product and engineering shop that has been hammering away at building the best product for this one thing in this one industry for 10 years. And like, good luck everybody else is like usually my mentality. But when I think somebody's in there, like figuring out the nuances of the way that some part of the technical stack at our customers works and how they would fit into it and really guiding and advising them on that, I'm like, I almost don't need to know the other details. Like, I'm like, okay, that's going to be a problem, and I think, I think it's going to be a theme. I think like watch that forward deployed Palantir hype theme over the next, and it takes a lot of different flavors, but like keep your eye out for that.
Okay. And so one thing, we probably should have talked about this a little bit earlier, but I want to hit on it now because I guess maybe we're in the weeds of like fraud, compliance, the Alloy product, I guess, the implementation. You've mentioned something in the past that the more consumer protections there are in like an industry or a market, the more fraud that happens. That kind of sounds counterintuitive because I would think, oh, there's all these controls and like there's all these protections around consumers. You can't commit fraud. Can you just explain that? Like, how is that even possible?
Yeah, like so the way I've often brought this up is like, why is fraud? The word fraud actually basically means a different thing in Europe than it means in the United States because they've regulated. Have you heard this, that Europe has like more regulations on technology companies than the United States? Is that something that you've heard?
Oh yeah, I feel like that's like the current narrative is just like it's like what is it? The U.S. leads in AI, China leads in something, and then like Europe leads in regulations or something.
Exactly. I feel like it's been on the news recently. And so one of the areas in which they regulate is how is differently than the United States tends to be how like areas around fraud. But I think sometimes to the positive. And so an example would be they were like very rapid adopters, the earlier adopters of like chip and pin, which we now have here in the US, which solves for the problem of what happens if somebody just like takes your physical card? Can they basically impersonate you? And it's like, yes, in the US still to this day, it sort of is yes, sort of is increasingly no, but sort of is yes. And then for online transactions, they were earlier adopters of like 3DS types concepts where you do an e-commerce transaction, but there's a second factor of authentication so they can't just steal like the numbers off your card. They would have to also have your phone to even be able to complete the transaction at some level.
Oh, interesting. We don't have that in the U.S., do we?
It's like a protocol that exists and is adopted, but it's not like mandated. It's coming. So you're going to start to see a lot more like do a second factor before you go do things. But so like And another thing that they have like very different regulations or different standards on are how you kind of manage identity verification and other things. But basically, as a broad statement, the way that fraud gets perpetrated is one of two ways. Either on one side, the customer gets defrauded, and that's what everything I just talked about is trying to combat.
So this is like me with my account at Bank of America. Someone steals my identity or steals my bank card and drains all my money.
Exactly. So, what happens if that happens? So, then you go and say, what? You go say, I didn't do that, right? And then Bank of America, you would say, I didn't do that because you didn't do it.
Yeah, even if I did do it, I'd probably try to see what I can. Hey, that Disneyland trip, that was not me. Some
I've never
crazy
heard of
hacker.
Coinbase.com. I've never heard of it. So then that's the perfect point, which is you would call them and say, I didn't do that, and they would give you their money back. Well, a regime that favors the consumer and says, don't ask any questions. In fact, we're going to scream at you if you ever get it wrong in denying a claim, that you can either be lying or you can go steal somebody's stuff and basically create a bunch of charges and say you never, and then somebody along the way is going to say you never made them. They never made them, and the money's going to get charged back. Versus if everything is more of like a highly authenticated experience without as many of the fallbacks, then you have less area to defraud the institutions. And the US has just aggressive, and I love this about the US. I think it's a good thing. It just creates a bit more of a problem of aggressive. You just call your bank, and any type of transaction, like period, hard stop, that you didn't make, they just have to figure it out for you. And it was actually the case that when they came out with like Zelle, it was one of the first, and then a lot of the more real-time payments, it was one of the first times they had to kind of confront, well, now we've got people logging into online banking. We really think it's them sending money to people. And then they're saying, I didn't do that. And then we're saying, do you mean you didn't do that? Or somebody tricked you into doing that? And they say, oh, it's the second one. They tricked me into doing it. Well, with card transactions, historically, they've just been like, okay, tricked you into doing it, refund. They don't have to do that, but like that's been the environment. And with a lot of this sort of real-time payment stuff, they were kind of like, do we have to do this? And so that's what I mean. Like it creates the conditions. The more consumer protections are. Another example is credit bureaus. Credit bureaus have a lot of consumer protections on them. For example, if you get on creditkarma.com and you see a credit line that you didn't open, you can call that credit bureau and say, get that trade line off my profile. Well, what if you're lying? It's like, how are they going to figure that out?
Oh yeah, so I could have like 2 maxed out credit cards that are legitimately mine, and like I'm in trouble, and they say like it's not me, and they take it off, and I can go apply for more cards.
You got it. Especially, and there's other things you'd have to do to pull that off, but you can do those things. And, so things like credit washing so every time you create a consumer protection, you create an avenue for fraud. That just as a broad statement, that's effectively true.
Wow, fascinating. Yeah, I mean, I would think that they exist to prevent fraud. So, but it does make
Turns out.
sense. One thing I know that you have a lot of experience with, we talked about working through the desert, the doldrums, the ups and downs. During that time, you did have to fundraise. You maybe fundraised before, during, and throughout of it. You kind of described a little bit earlier that it sounds like things are going a little bit better now. But can you just kind of describe, I guess, that journey and what you learned, what it was like going back to the beginning?
Yeah, so we raised our first fundraise was $1.5 million. We were trying to raise $500,000. We raised 1.5 million. Look at us.
Wow, yeah, oversubscribed. What is 3x oversubscribed? Yeah.
At some valuation in the single digits, that would like make your hair spin in this kind of era, but felt like incredible to us. We were super pumped about it. And that fundraise was actually pretty easy. And I've talked about this a few times, which was it was somewhat difficult, but it was mostly easy. And that's because raising money is like easy when you're growing fast, and like with a spreadsheet that just works. And it's easier, and that's the easiest. It's the second easiest when you actually have no growth at all, and can't even produce a spreadsheet because we're pre-launch, just a story. Everything, all the upside in the world is believable. You get an 100% probability. You get 100% allocation on the small percentage chance that this is going to be the next, whatever the fastest growing company of all time is. And then the minute you launch, there's now a 0% probability it will be the fastest growing company of all time within 3 months, because like something hard happens. And so you're just not that company.
Yeah, it's like that one meme with Silicon Valley where Russ Hanneman is like, revenue. No, no, you can't generate revenue because then they expect more of it.
He's right. That was like a joke, but like I have no notes. Like completely agree. So, but the problem is, how long can you keep that up? Not very long. So then you have to get the revenue and you have to cross that chasm. So we raised $1.5 million, super pumped about it. We were then a year later, when we thought we were going to have some of our early customers going live, which I've already mentioned took some time. We tried to raise another $2 million or something to kind of capitalize on some of that early success, which then ended up taking longer, as we've discussed. It took Laura and I 20 months to raise that $2 million. We got 100 no's that were serious no's. 100, not like doesn't take the intro, like had a conversation, 100 no's, 7 investment committees at the seed. We went to 7 investment committees and came out with a no.
So this is like you go in a suit or like looking, snappy and like presenting it to a bunch of people.
Turner, well, no, but
maybe you should have. Maybe that's why you should have worn a suit.
That was definitely the theory of many people around the table at the time.
Oh, really? Okay.
I can definitely tell you there were people with that theory. And you never go to investment committee and get the no at the seed. That they do not do that. Like that is like a 1 in 5. We just like that is very rare. It was such a slog.
So what? Okay, so maybe you're gonna explain, but like, what was going on? Why was that happening?
Well, I'll tell you that, but what's funny is our Series A was not easy, but it was easier. And then basically I never spent time fundraising again and then we raised $180 million from that point on, or more than $200 million from that point on. And it was basically because for 2 reasons. One is, and this is what I was talking to you about like before, I figured out maybe I should have been wearing a suit. I don't know. I think people are better off trying to be the best versions of themselves that they can possibly be. And I could become a suit guy. I could invest in that and like become a big suit guy. And then I would feel like comfortable and confident in a suit. That's not who I am. I could become that person. That's not the person I am. So that's probably not what it was. It was actually just that there's like a way that you have to be and a way that you have to tell stories around products that when you're fundraising that I just had a lot of trouble embracing, which is that you have to be, you got to get your head out of the caveats and the weeds, and you got to paint the part of the picture people need to understand before they get into the weeds with like really, really high specificity and conviction that is just about getting to the story. And like everything that I tried to do that I don't do anymore, I don't think, when I'm fundraising, about like, let me try to get you to understand how many details I know about this and how hard it is and how interesting some of the problems are. Massively distracting. In fact, you start to make, like, I like hard problems. So you start to make the problem seem really hard to the investor. And now they're really thinking about, can that guy solve these really, really hard problems like this guy, And maybe they fall in love with the fact that you know so much about it and you seem like such a good problem solver, but more likely they get more intimidated by the problem, and you distract them from like the really big important things you need to understand. And so I used to like really get sucked into a lot of the nuances of this, instead of saying, hey, like, what's different about financial services is this risk stuff. Here's some really easy ways to understand how big of a problem that is. Here's a really easy to understand why this is a no-brainer ROI for every single one of our buyers. We've taken a different approach that's really easy to understand. And like this plus this plus this equals, $1 billion of revenue. And like, that's what we're going to do. And like, whenever I talk to founders now about like how they're pitching, I always see that version of myself that wants to fall in love with the details. And like something I think I'm getting better at is stopping them and going, I heard this very short story. This is happening. So this will happen. And $1 billion of revenue. Does that sound right? And they're like, yeah, that's exactly it. I'm like, just say that. And then they come back 2 weeks later and they give it to me again. And I'm like, no, wait, remember?
You're still not doing it.
Right? Remember, it's this, and then it's this, and then it's this. And they're like, yeah, but there's all these other things. I'm like, I'm telling you, that comes after. So that was the one thing is I really got religion around that. And the Series A process actually really, I clicked for me, like the meetings that were going well. And that was the difference between the meetings that were going well and the meetings that weren't. The other thing is just, man, the score takes care of itself in a more obvious way, which is like it's not, that's like the, details add up to the bigger outcome. It's more like at some point, the customers just talk, they're paying you, they're growing, they're staying, they're referenceable, and it's obvious that you're doing something different. And so, investors start coming to you with more of the kind of thesis stuff done, and then, it's just easier from there. But I can't believe that this is still the way it works. I think that raising $2 million when you're in the weeds, trying to get the first couple of customers live, is so hard. And raising $100 million is 3 phone calls. But that's the truth. Like that's the truth. And I think what founders can do and learn from is really find somebody who gets you to like this. Here's what do they need to hear? That's also true. It's got to be both those. In my view, that's not everyone's view, but it's got to be both those things. What do those people need to hear? That's also true. And we got to stick to that. And we got to reverse engineer everything we're doing so that they hear what they need to hear, that thing that is also true, and that all the rest of it flows from there, because that's like kind of the magic formula. And then the business starts to work, and that kind of like is a very different version of storytelling. I turn out to be a better fit for that version of storytelling of like, let me explain to you why what you see is real and durable. But man, is it hard to do that. You can't see it yet, but let me paint you this super crisp and clear vision. And I really respect founders that can do that naturally. I think founders that can't do that naturally, which is 99% of founders, find a sparring partner that keeps you honest on that and just like invest in it, commit to it,
Yeah, it makes sense. Maybe another way to think about it, this is the way I kind of describe it to people. You need to remember that the investors are just trying to make money. So you just kind of need to remember like you want to look like a good investment. And then that comes from a lot of different things, but I feel like that's something that's easy to forget is like you're an asset that they're buying into at the end of the day. So like, can they get 100x, 1000x return on investing in you as founders as an investment? And then that ties into numbers and like here's how big we can be. We think depending on what stage you're at, like we think this is how big the market is because of these many customers at this size, product roadmap. This is what our LTV might look like. Like, I don't know, like this is all kind of an art, but
it's such a good point. And something that my co-founder Laura really helped me finally get religion on, that is another way of explaining this, is remember they're going to have to explain it to somebody else. They're going to have to explain it to somebody who doesn't give a shit about you, hasn't met you, has no rapport with you, doesn't care about you. They might meet you, and if you're thinking about sales right, you'll meet you'll find out who these people are and you'll go meet them. But they're probably going to have to explain it to somebody who doesn't know you and doesn't give a shit. And what are they going to say? Are they going to say, you'll never believe the secret that they've unlocked? There's this really interesting, funny market that nobody's looking at, and they're just gonna drive a Mack truck through it, and it's just so incredible. And we got to nobody else better find out about this. Or are they going to say, do you know about the Bank Secrecy Act? Sorry, what was it? The Bank Secrecy Act? Was it the? Oh man, maybe it was Dodd-Frank. Anyway, there's some we're over, right? And you need to remember, how do you get that person to say, God, I just learned this secret. I can't stop thinking about it. And I just really feel like this founder is just going to drive a train through this problem. And like, I can't wait to be a part of it. And everything that's like what you think is like building this relationship with one person, it's got to turn into that other thing. And like, when you believe that, you can start to reverse engineer your way into like, okay, well, what would it actually take? And it takes repetition, like bizarre amounts of repetition
of the story of pitching it and just
of the story. Remember, it's this, and this. It takes being really committed to like getting it back to that story. Like those are the things that it takes. And remember, they're going to have to say it to somebody else. That's true of sales. That's true of fundraising. That's true of all of this stuff. I like yours. Remember, they need to make money.
It's the most simple form of it.
It's good. They're going to need to make money, and they're going to need to convince somebody else. And if you forget that, remember, they're going to have to convince somebody who really only cares about making money, who's never met you. Now, what are they going to say?
Yeah. And then, even if you meet like the founder of the firm, like the head guy at insert brand name fund, they have investors, they have LPs, and there's got to be like a, hey, we've got this alloy. It's this like fraud risk. Like every financial services company, compliance and their fraud and the whole product of financial services, don't lose money and make sure that you don't get scammed, or like we can take a percentage of the revenue of the entire financial services business. Like I could, that's the pitch, right? And people are like, oh, what's the TAM? Like hundreds of billions of revenue. Yeah.
That's it, man. You just did it. Like, that's what they need to turn around and go, fraud is killing financial services. We hear it from every single fintech we've invested in. And Alloy has just like thoroughly solved it. And it's crazy. And we're basically, yeah, fundamental business of financial services, protect your customers, don't lose money. Alloy is going to be like the AWS of that for the fintech revolution. And that's it, right? I would never tell that story when I was younger. I just couldn't do it. I just couldn't I'm like, because there's some detail of that's not exactly right. I just couldn't tell that story. And we spent so much time, dude, trying to do TAM analysis.
Oh, really? Like for yourselves or
for investors. What's the TAM? What's the TAM? And then someday we never talked about it again. Like, you know, like 2019 came around and it was never, turns out it doesn't matter. Nobody cares.
So, okay. Do you know what the change was? Was it just our social proof around like this is a real market?
Social proof, and then just the storytelling got better. Because when people say, "Hey, can you do some TAM analysis?" You missed the story. Because the first meeting Laura and I ever took, first fundraising meeting we ever took, we thought we did such a good job. And one of the VCs was kind of a product guy, and one of them was more like was just like a VC, and the product guy was, do you know what I mean?
Just a VC, he's just like a spreadsheet guy.
Yeah, exactly.
Okay.
Say no more. And the product guy, we had a great conversation. He was pretty fired up about it. And then the other guy didn't say anything. And at the end, he said, "Is fintech a big market?" And we were like, "Well, yeah, yes." Like, what do you mean? Like financial technology? Like 60, I don't know what, I don't even know. Is it like a $200 billion revenue market selling technology to financial services companies or something? But like, he was like, "Oh, that's interesting. Like, doesn't seem like a big market to me." And we never heard from them again. And it was like one of those things where I was like, we had this huge conversation about the product and all this stuff. And there was this guy who was sitting there the entire time going, "Is there even $200 million of revenue in that market? Like, does that even exist?"
He said million, 200 million.
I don't know what he was thinking, because I was just so stunned by his fintech a big market. Now, if I had told the story differently, he never would have said that, because he would have been like, "Oh, you're talking about the global financial markets and the underpinnings of that and the digitization of that." But I had somehow gotten this person to think that by like fintech, I meant like, what was it at the time? Cash App or something, like, like that being the only thing I could possibly mean. And, someday you just get better at telling that story. And I think if somebody's asking you for a TAM analysis, like maybe just like go find somebody else to talk to.
Yeah, you got to probably start from scratch.
That's what I
like
think.
figure out the story. Yeah. So one thing I guess I'm curious in terms of, you've got all this. Actually, one sidebar based on all the conversation about fundraising. It's really interesting when you talked about you like couldn't remember how much you raised later on, but you remember viscerally those very small, precise numbers. It's kind of fascinating just throughout all these convos on the podcast. Like I'll have, founders raise like $1 billion and they don't remember the number. They're like, I don't know, it was like 600 or 700, 800. Like, I don't remember. Like at that point, you get to a point where it's like, it becomes like, I don't want to say it's on easy mode or it just like someone else does it because it's a spreadsheet, but it's like you have this like visceral connection to like we raised $632,000 and it took us
I know the
4
exact numbers and exact pre-money valuations of the first two raises, like to the dollar. Like I know. I don't remember a lot of the others, but I know to the dollar those.
Yeah, it's fascinating. It must be because like the business works, the product works, and it's easier. There's less friction. The 3 phone calls.
Yeah, I also just think it was because I thought we were going to die. And so there's something about like not dying that's really quite memorable.
Yeah, fair. Okay, so I don't know if we're going through a story or narrative or whatever, but like you figured out fundraising and you've done some hiring over the years, right? I think you mentioned earlier you have 285 employees. How has that kind of evolved for you guys over time, and like what kind of traits do you usually look for?
Yeah, speaking of numbers, I know very precisely 258, not 285.
2 5. There you go.
Because of what everything tech company has gone through over the last 2.5 years, trying to figure out, how you really think about like growing spend while you are growing revenue. That's now become in my bones somewhere of like, you know, how do we decide to grow teams? And what's great about that is now I think we've had to do a lot of very specific thinking about what kind of folks are going to be successful here, and we are hiring a lot of them, and I'm really excited about that. I'll tell you about that in two phases. What are the things that I think we got right that we've kept with us, and maybe some of the things we got wrong in the very early days? And then what are some of the things that we've been kind of thinking about like more recently that I think are good, interesting things. So from the very early days, something that we got committed to pretty quickly was figuring out like what the cultural non-negotiables were at Alloy, and being like making hiring, firing, non-hiring decisions around those. And our values, the values that we like really spend a lot of time looking for in that process. The number one is a very specific definition of collaboration. We really want people who foster collaboration by, I think collaborative people are smart because nobody wants to collaborate with a not smart person. They're humble because nobody wants to work with somebody who they think has they know that they think they know everything, and they are like welcoming of, they go think about who could come together to solve a problem faster. It's not like work with two people instead of work alone. It's like you are always doing the thinking of like, could I do this faster with somebody, and they're kind of like welcoming into that environment. So we think a lot about that, like, will this person increase the amount of collaboration? Because when you create an environment where people are like angsty about having to collaborate with somebody, it massively slows things down. Um, and then we care a lot about celebrating the differences of the people here, and we take a very employee centric view to that. Like, will this person be somebody who's able to contribute to like an active celebration of the differences of all the folks that work at Alloy? We invest a ton in our ERGs, for example, and really empower them to like do stuff and run events at Alloy.
You said ERGs.
Yeah, our employee resource groups. So that would be like you know, we have one for like Hispanic folks who puts on, they have a budget, and they put on events that, like, instead of us trying to do that as the company, like, we empower people who want to do that as a group to like build events and have people go to them, and take over parts of the office and stuff like that. So we invest a lot. We invest a lot in that. We try to hire people who are scrappy, meaning they don't think they're too good for any particular problem, like to just do what needs to be done, and people who are bold and want to do kind of big things. And I think we did a good job early on of figuring out how you identify like the non-negotiables, like somebody who will be antithetical to people who want to have like an environment where we celebrate our differences, or will be anti-collaborative, or can't be bold and try to do big things and are like scared to do that, or think they're too good to do certain things. And so like that's more like the cultural non-negotiables. But I think like I'm happy to talk more about that. But I think what's been more interesting now, kind of like recently over the last 3 or 4 years, after hiring a lot of people and trying to figure out what qualities like really work, and kind of what doesn't work, is trying to think more about how do you identify somebody who's like a problem solver at their core. And that's part of what makes me like the teams that I mentioned earlier, like what teams we put on, like technical solutioning of various kinds. I just have so much affinity and respect for like the high octane problem solvers, and people who look at a problem as like people who look at a problem almost as like an exciting thing, like, ooh, like, look at this problem, like, can't wait to get my hands on it. Like, those people are such gems. And I really spend a lot of time kind of looking for those folks. And that's like kind of on the ground. I love people who love a hard problem.
So how do you find someone like that? Like if I'm a founder and this sounds great, like I'd love to hire somebody to just go solve problems for me. How have you sussed that out ahead of time? and known like, oh, this person is going to be great at Alloy at helping us solve problems?
Yeah, we man, God, it's so hard because like you can't put people in a situation where they actually have to solve a hard problem during an interview process. So actually, I like just asking people about a hard problem they've solved. That's one is actually surprisingly a lot of people choose a not hard problem and describe it, and there you go.
So then you just say like, that doesn't actually sound that hard.
Yeah, you just say that to yourself and then you move on. And then another way is we do try to work on problems in every interview that we do, and that's become like like people will tell you you can't do that, you can't do work assignments. Like we try not to give people a ton of homework or anything, but we try to do something. We're going to work on something together and see how you think about and tackle a problem. And I think people who, yeah, it turns out there's kind of no better way. And so, okay, like if we're not supposed to do that in hiring processes anymore, then I don't know how we're going to find people who know how to solve problems. It's the only way. Like we just got to work on something together. Like even if it's in the room during the on-site from scratch, let's just work on it. We got to work on it together. In engineering, it's getting harder and harder and harder to do this because if you're doing any kind of remote interview and you give people a problem that they could use AI to solve, like maybe that's good because they're being clever, but like it's becoming like a harder and harder and harder thing. So it's forcing us to be more and more and more clever around, well, what kind of I mean, we don't need somebody who can write a linked list, specifically. We need somebody who's like a good problem solver. So how do we put people more in a situation to do that? So that's kind of on that end. On the leader end, that's been like a more, I think every founder and kind of CEO like of a growth stage company has gone through this. Like, what does a leader really look like? That what does a leader really look like that can work in this environment? And finding people who can straddle that. Like, I can get all the way down into the work, but I can also think about the strategy, and I can also contribute to the systems that connect all of that together. But I'm also a professional at trying to convince you I can do all of those things because that's like what like professional executives are. How you figure out how to break through that and figure out what's real among the I could get in the weeds, I can be up here in strategy, and I can also participate in all the connective tissue. That was something that I think I did really. Um, I was like almost sort of a random number generator in my level of quality, like early on,
Okay.
like just maybe
That's an
right, maybe
incredible
wrong.
description. A random nut, just like no skill at doing it
No
whatsoever.
skill, exactly, like, no skill, roll of the dice, and, I think I've gotten a lot better at it, and that's partially just because I just know how to talk to folks and kind of understand their mentality, and also just part of because, I've gotten just more committed to, like, spending more time with people before they become leaders here. Like, I just been spending a year on some of these hiring processes. Actually, we just hired, I'm pretty sure we can talk about this, like, we just hired a COO who really runs a lot of the not like a lot of the things that actually touch our customers. A guy named Dustin Lawler, and he comes from Datadog and did a lot of those jobs, like whether it was support or professional services or building internal systems for knowledge and enablement and stuff like that. Did a lot of that stuff at Datadog, and I'm really pumped to have him. I think he might be like right there. I think I can see him. And I met him over a year before we ended up. I was met him because I was thinking about this role over a year before we decided to do it together. And that was a mute, I had to convince him to do it. And, we'd like, that was a lot of different things, but that's kind of how I've been doing that hiring. And so like on the hires we have to make a lot of, I think you're like looking for those qualities that like turn out to be representative of a problem solver. It's just something we're always trying to spend more time figuring out how we can do that better and better and better. But then on the executive sort of like hiring the leaders, it's like, you tell me if you know anyone who has a better answer to this. I just take a lot of time. That's my best answer I have right now. And if there's a faster answer, I would just really love it. But right now, that's my solution to that problem is just be really like thoughtful, meet a ton of people, get an insane number of data points, and then pretty much be able to tell, okay, I know what's out there. I know what these people are like. I got to be all in to go get this person to join the company and whatever it takes. Like that's kind of my mentality.
One way I've heard people describe it is, I like to hire ex founders. So it's like the big picture all the way down to the weeds, implementation, can write the code, can do the customer service for whatever the product or the problem is, but also like can be a CEO. at the same time. So I think I've maybe elements of what you're saying is when people say like, oh, we like to hire ex-founders and they like come in and own a problem set.
I can't hire any ex-founders because I can't have somebody threatening my job. I got to be.
you gotta be the one getting all the PR. Well, you guys actually do like no marketing, right? Like you've historically like really shunned marketing. Why did you do that? Because usually you want people to know you exist.
Incompetence on my part, mostly. Our I think we do marketing very well now, and I'm proud of our marketing. But yeah, we really spent the first 6-7 years of the company not really rigorously focused on marketing, and it actually does go back to what we talked about earlier. It's just deep obsession with the sort of solution to product to platform to solution to product to platform flywheel. It's just like the only thing we cared about. And I just still to this day, like before I got on this, I was talking to a solutions person about a solutions thing. And the minute I get off, I'm going to go talk to a solutions person about a solutions thing. Like I actually probably should do something else with my time, but it's just we're just so obsessed with that flywheel. And now that we invest a lot in marketing, and I'm actually really proud of our marketing leadership and a lot of the things we do, but they come from that DNA of like, for example, I think one thing we do really well is we put together client events to get our clients together to talk about, guess what, solutions to their problems that we might build or that they might share with each other. So like a lot of the things that I think we do really well sort of stem from that mindset. And now that we've invested a lot in marketing and we'll continue to invest a lot in marketing, we're actually investing. It also has a lot of thematic similarity to what I talked about earlier with pitching. It's like, how do we get people to better understand the specific problems we think we can solve for them so that they'll give us an opportunity to solution them for them and really go deep with them. That's really like, we take ICPs and ideal customer profiles and ideal customer use cases and just say, okay, if that's what we really think we win at, what's it going to take to get those people to know that we do those things? And that's really like, so we still take this like solutions mindset to marketing, even though we're a lot more invested in it. When I said incompetence earlier, though, I'm not like, I mean that like there is another level of it, which is just like, why didn't we do marketing for 5-6 years or whatever it was? We did some, we had, but like we had a website that we never updated or whatever.
Here's a website, we're doing marketing. We're on the internet.
We bought alloy.com. Some of that is just like my own, like the biases of my competencies kind of reflect what we can become competent at in those early years. And that's part of why those other leaders, like spending so much time on them matters, because if we decide we're going to become a world-class go-to-market and marketing organization, some of that's going to have to come from what I'm good at, which I think is that product and solutions and how does everything fit together, like mindset and flywheel. But some of it's going to have to come from other people who say, I know what good looks like. And if I were to say one thing to founders about what it takes to scale from like product market fit through, big revenue milestones or whatever, it's like, what do you know what good looks like? Like, what things do you know what good looks like? On what things do you know what good looks like? That's a hard sentence to say. And just commit to that and know what good looks like and be uncompromising on it. What things don't you know what good looks like? And which of those are going to be critical for your company? And like, go figure out what good looks like. And if you can use your investors for one thing, it's to constantly task them with, what does good look like? Who can I meet? That's what good looks like. Who can I meet? Who can I meet? Who can I meet? And a lot of times they're going to be like, I don't really know, because actually nobody's good at that. And it's like, okay, we got to find somebody who's good at it though. So like, let's all be on top of that. But that's, I think, like, once you know what good looks like, you can kind of do whatever it takes. But until you know what good looks like, all you're going to be doing is compromising all the time. Compromising. It's pretty hard to build a company through compromise. So
nice. So then that's a pro tip for anyone that's listening to this and they're an hour and a half in and they're trying to sell to Alloy and to Tommy. Like, just come to the office, like do an on-site, and you're more likely to close the deal.
Dead ass. All right, Tony. I gotta go,
well, this is a lot of fun.
Yeah, I enjoyed it.
And I hope you enjoyed it too. If you missed it, make sure to check out last week's episode with Mike Murgison at Ada, where he takes us inside his journey building one of the largest AI native software companies. Tune in next week for a conversation with Ed Lando, who is the most active angel investor in the world, according to Crunchbase. Thank you to Numeral for supporting this episode. Give them a look if you want to put your sales tax compliance on autopilot. If you like this episode, please leave a quick review or comment wherever you're listening or watching. Check the show notes for more on the topics mentioned throughout the conversation. And if you don't want to miss a future episode, subscribe to my newsletter, The Split, to get each one, plus the transcripts emailed directly to your inbox. Thanks again for listening. See you in the next episode.